You might think that a small mistake on your life insurance application won't matter, but even tiny inaccuracies can lead to denied claims. At Boonswang Law, we've seen beneficiaries lose the benefits that they were counting on, all because of an honest oversight years earlier. In this video, I'm going to break down how false information, whether intentional or not, can impact a life insurance payout. And later, I'll share the #1 mistake that keeps people from getting the money they deserve. Managing a claim denial can be stressful, but you don't have to face it alone. Make sure you check out my complete playlist, and I'll guide you every step of the way. Life insurance is supposed to be simple. You pay premiums, and when the insured passes, the beneficiary gets a payout. But the fine print, that's where things get tricky, especially when there's false or missing information on the application. What are the common types of false information on a life insurance application? These are the most common areas where problems happen. #1, health history, omitting conditions like past surgeries, high blood pressure, or chronic illness. #2, lifestyle habits, skipping over smoking, drinking, or recreational drug use. #3, occupation and income, reporting a safer job or higher income than reality. #4, family medical history, leaving out major hereditary conditions. Even if these seem like small details, they're often used by the insurance company to assess risk. Any red flag here can trigger a denial. What is the contestability period? This is a critical concept that most people don't know about. It's typically the first 2 years after a life insurance policy is issued. During this time, insurers can investigate any claim and void the policy if they discover inaccurate information on the application. We handle many cases where an otherwise valid claim is denied because of something flagged during this period. What are the consequences of providing false information? Here's what can happen if there's false information on the application. First, policy cancellations. The insurer can cancel the policy outright. Next, you have claim denials. This can happen even if premiums have been paid for years. Finally, you can get in legal trouble. In cases of intentional fraud, criminal consequences are possible. What happens if you're caught lying? If you're caught lying, especially during the contestability period, the insurance company has a strong legal basis to deny coverage. Even if the lie was unintentional, they will argue that it would change their approval or the amount of the policy. What if you made a mistake? Mistakes happen. If you realize you made one, act quickly. Contact the insurance provider and ask to correct the record. If a claim has already been denied, talk to a life insurance attorney. Here at Boonswang Law, we've overturned many insurance denials based on such errors. Here's why full disclosure is so important. It's tempting to play it safe on an application, but the safest move is actually full honesty. Your family's financial future depends on it. Being upfront now protects your beneficiaries from stress, delays, or denied claims later. This is the #1 mistake I see on life insurance applications: not confirming the answers on the application if the insurance agent is the one inserting the answers. What happens oftentimes is a prospective insured will be going through an application with an agent. They're answering the questions on the application that the agent is posing, and the agent is the one writing down the answers on the application. The problem is that oftentimes the prospective insured doesn't check the answers that the agent is listing down. And oftentimes the agent, believe it or not, doesn't write down the answers that the insured is giving them, which can cause a disaster. So always make sure that you're checking your answers and don't let the insurance agent speak for you.